Very good afternoon, my friends. Welcome back to my channel. In this video, I'm going to show you how to trade options for beginners. So I know a lot of people are also coming from equities trading, or forex trading, cryptocurrency trading, Nifty, Bank Nifty, and several other things. Whatever the case may be, and I know also several people, they don't know exactly where to start with. So in this video, I'm going to go through the steps that you need to take. In order to start your option trading journey, the basics of options, what they are, why you should trade options, why they might be more beneficial for trading equities or anything else. Also go through the differences between the equities and options, and you can also capitalize on both in the market depending on overall market structure and market sentiment. But this is a really great video if you don't know where to start, if you don't know what book to read or what internet sources to look at. I will link them all down below so that you guys have everything, and I will go through exactly what helped me and what I read and what I look through and what I watch in order to able to kind of start my journey. And there are also a lot of information on the internet, so it is a kind of hardship through all of it. So in social media, in YouTube channel, definitely you will get fantastic videos over there. There are also experts made those videos. You can go through all those. I will also link most of the good videos below that. And please hit the like button and subscribe my channel if you like it. And let's go ahead, get started all. Thank you. So, what is option trading? It's a very vital question that we have to learn. This video is, as I have told you earlier, that is for the beginners. So the beginners, those who are also willing to trade also in options, you should know a little bit about this. Okay. Option trading involves buying and selling options, which are also financial instruments that give traders the right but not the obligation to buy or sell an underlying assets like a stock, commodities or index, etc. at a predetermined price within a specified time frame. Option trading can be used for various purposes such as speculation, hedging, adjusting existing positions in a portfolio. That is more or less, you can say, the definition of the option trading. Now, you can also learn a little bit more about this. You have to learn and you have to know before using those things. Okay. So I will try to explain all those things in a very brief manner. If you want to know a little bit more, then you have to also Google something. Google your internet, and also you will get more and more about the topics. Number one is called option. Options are basically two types, call and put. Yeah, call and put. As you can see, that is my previous video. I will give you the link over here. Previous video, I have told also how to select the strike price. So it can help you also to know about this call option, put option, like this. Call option gives the holder the right but not the obligation to buy assets at a specified price known as the strike price on or before a specified date. That is also specified date is also there. So, weekly, monthly, yearly, that you have to check it out. And put option gives the holder the right but not the obligation to sell an asset at the specified strike price on or before a specified date. Okay. That is about the call option, put option. Now, in between that, you have to learn also a little bit more about like premiums. What is this? And some of my students used to ask me, sir, premium kya hai? What is that? So, premiums, this is the price you pay when buying an option or the price you receive when selling an option. It is essentially the cost of obtaining the rights that the option provides. The next one, exercise. To utilize the right provided by the option. For a call option, it means buying the underlying assets at the strike price. For a put option, it means the selling the underlying assets at the strike price. Okay. So, these are the things. Now, it can continue. The number 5 is expiration date. This is very important. Expiry date. Yeah, this is also important to know about this. The date when the option contract becomes void. 0. If an option is not exercised before its expiration date, it becomes worthless. Okay, is this clear? Expiration date. The next, that is ITM, OTM and ATM. This we have to know. This is very important. As I have also explained it in an earlier video. Check it out. In Bengali I did it, I think so. Let me, if it is necessary, I can also make a video in Bengali if the students or the interested viewers, if they are willing to also get some Bengali video, then definitely I can make it. First of all, the ITM, an option that has intrinsic value. For instance, a call option is ITM when the current market price of the underlying asset is higher than the option strike price. A put option is ITM when the market price is below the strike price. When the market price is below the strike price, that you have to understand. Yeah. Number 2, it's your OTM, an option with no intrinsic value. Intrinsic value is 0. Only the time value is there. A call option is OTM when the market price of the underlying is below the strike price, and a put is OTM when the market price is above the strike price. When the market price is above the strike price. Yeah. As I have explained it in earlier, above the strike price. That is the OTM. The next one is ATM, an option whose strike price is very close or equal to the current market price of the underlying assets. Okay, sir? So, these are the 3 things that you have to understand a little bit, that is ITM, OTM and ATM before taking the trade. Because most of the time you used to ask, sir, what is ITM, what is OTM, what is ATM? As I have told you earlier, always prefer the ITM strike price. OTM you should not take. maybe on expiration date for the zero heroes condition you may take that things, but it doesn't mean that it will work all the time. Yeah. And ATM price also can be taken, that can be taken, but we are not practicing that things, we are practicing only with the ITM. As I have told you on earlier video, that is ITM price, in that case I will take 100, 150 for the Nifty, 200 for bank Nifty, yeah, and that depends upon what you are going to buy, either put or calls. As I have told you, if you want to buy put, then you have to take at least 200 more than the spot price of the bank Nifty or Nifty. Similarly, if you want to buy put, then you should take 200, 150 to 200 less than the spot price of Nifty and bank Nifty. Okay, I think it is clear now. Now question is that why do people trade option? It's very vital question. Number one, the leverage. What is that? Option allow traders to control a large position with a relatively small amount of capital investment. Okay, small amount of capital investment. In the normal stock, if you want to buy, then you have to pay more. Yeah, but for the case of options, you don't need to pay so much. Number two, hedging. It is also a term that the option people, the option writer and also option seller, you can say, they used to do it very frequently. Yeah, hedging. Investor can use options to protect their portfolio from adverse price movement. Yeah, adverse price movement. The next one is income generation. Traders can earn a regular income by writing or selling options. Yeah, this is very good and interesting. In that case, you need more investment. Buying option, you don't need so much of money, so much of investment, but selling option, you need more capital, more than 1 lakh. Okay, but if you do some hedging, you can also control the investment of that your capital. Within 20 to 30,000, you can also buy and sell put or call options. Okay, you have to know what to do. First you have to buy and then you can do the sell. Then you can see that is within the range of 20 to 30,000, you can also buy or sell. Only one lot, I am talking about only one lot. Okay. The next one is the speculations. Due to the leverage they offer, options can provide significant returns on small price movement. Yeah, making them attractive of speculative purposes also. Yeah, flexibility is also there. Options can be combined in various ways to create different strategies that can profit from rising, falling, or even sideways market conditions. But I prefer not to take any trade when the sideways market is there, because at that time it is SL hunting is most of the time. Okay, you can do scalping also. Yeah, when it is goes up, you can take call. If it is goes down, you can take put, but within very small range, 5 to 10 points for scalping. We do most of the time scalping. Okay. So these are the point that you came to know. This is more or less about the option tradings, but this is advice to all new traders. Please, it is essential to understand that option trading is complex and involves also high degree of risk. Before getting involved, it is crucial to educate yourself or oneself thoroughly, and if possible seek advice from financial professionals or advisors. Thank you very much. We'll see you on the next video. Thank you. Bye. If you have some queries, then you can also comment on the video, and kindly subscribe my channel and do like the channel also. Thank you very much. Bye bye.